Hey traders, checking in on the stock market today. A lot of red out there. We'll see which sectors were hit the hardest. And we have a lot of those daily lower highs shaping up as we were looking for after yesterday's video. We'll see where we stand in just a moment.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So yesterday we saw the bounce get some follow through, confirming daily higher lows were set, and we speculated the most likely scenario was a daily lower high because of how much space there was before we would encounter resistance. So SPY, as far as I'm concerned, we are seeing high of the vaccine day, low of the pullback, lower high, and the bulls are trying to hold that higher low. If we look at it on actually let's go to the S&P 500 futures chart. Let's condense it down a little bit, the 4-hour time frame. Not ideal for clarity. Let's try the 12-hour. So I like the 12-hour here. High, low, lower high, and trying to hold support. So the most important support for me in the short term is 35.12.60, and the most important resistance is 35.83.20 in that tightening range. How does that line up on SPY? Essentially 350.51 is key support. We held that by 20 or 75 cents at the low of today, and the most important short-term resistance for me is 357.52. If resistance breaks, the bulls keep complete control in the short term, and if support breaks, the odds of weekly consolidation will increase significantly. So tightening sideways range, and today was marked by everybody showing weakness. The healthcare sector and QQQ showed the least amount, and XLF started that daily consolidation, and it definitely hurt the S&P 500 the most, being down 1.6%. That being said, we know that XLF has a ton of space to form a daily higher low. Hourly RSI got right to oversold, and then look at that volume on the bounce into the end of the day. Very notable. So bigger picture, we know XLF is going to give us a daily higher low unless something drastic happens, and we're watching for an hourly trend change to indicate that it has been set. So on the current bounce, I would just be looking for an hourly lower high, and we have to then change that trend through tomorrow for us to say, yep, our daily higher low is now set. So the bounce is not developed enough for us to say that at this point, but that's something we're watching for in the short term. IWM, so setting a little temporary top as well, 173.33, 173.48, pretty much a double top on Tuesday, Wednesday, and now the daily consolidation is underway. I consider anything above 151.39 a daily higher low, so at this point we're watching for the hourly trend change back to the bulls for the daily higher low to be set. QQQ certainly looks like a daily lower high is being set. We're going to have to break the low of today tomorrow at 287.25 for that to be the case, and I'm just viewing this pretty much as our low of the pullback, high of the bull move, higher low, and scouting that lower high. If we break the low of today tomorrow, the lower high will be set, and we'll be focused back on 280.62 support, which is key for the bulls to maintain the daily higher lows. Healthcare sector, double bottom with Tuesday, 110.07, 109.98, so a little 9-cent difference between those two, and just a little bit of a short-term momentum shift if we were to break that level, and I would be looking then at the next level of 109.21. You can see we've closed lower than we have opened 6 days in a row. So that shows us the bears have a bit of control once that bell rings. And again, same as SPY, the question is going to be, do we start weekly consolidation now after bulls exhausted themselves on that bounce and then that climax on that vaccine news to start this week? So financial sector, hourly trend change back to the bulls needed for the daily higher low to be set. Biotech sector, we double bottomed at support, and here we are rejecting from resistance, pulling back 48 cents under that level. Most important support short term, 118.86, and most important resistance is that all-time high at 126. So there's our range, and we are close to the middle of that range, definitely favoring the bulls with where we stand right now. And if we pull back, we'll watch for a daily high or low compared to 118.86 as ranges continue to tighten. SMH looks a lot like QQQ, is our daily lower high that we were anticipating being set. Looks like it, and if we break 192.47, that will be the case, and we then look down to 188.37. And the solar sector, same thing, looking for that lower high. Break the low today and it will be set, and then that 70.40 level is in play. So TAN looks a lot like SMH, which looks a lot like QQQ, which looks a little bit like SPY, but different. And again, that's our two groupings, our tech sector, high flyer stay-at-home names, and our laggard sectors in different groupings. And it's our tech sector and high flyers that are similar to each other. And essentially, if the bears are going to prove anything to us into next week, we will have to confirm a daily downtrend and break that support level that was established on Tuesday. And that's the case for all of these sectors. For bears to confirm daily downtrends and confirm that weekly consolidation is underway, we need to break the low of Tuesday. And if that low of Tuesday holds, it's a very simple if-then statement. If the low of Tuesday holds, then the bulls keep complete control. So that is the most important level for me in the short term. The VIX. So the VIX trying to bounce here on the daily. We had a low of 22.40. We held 22.60. But again, upper wicks, not really a lot going on as far as recovery. And I've mentioned before that I don't have a firm grasp on trading the volatility index because in my opinion, it's its own beast and I don't have the time to tame that beast. But reached out to David Lincoln, who I've interacted with over the years. He's been trading for decades and he focuses on the volatility index as one of his specialties. So I go to him when I have questions and I asked him, on this big drop, it seems like we are dropping more rapidly. It's a sharper decline than we've seen on any of the other previous drops following big spikes. And his response was, we're still inflated. We're still elevated in this range. The VIX is a mean resorting instrument, and he reminded me to zoom out. In 2016 for the election, we were trading in the 10 and 11 range. And you can see, let's go to the weekly chart, but long term, that base range is between 8 and 13 essentially. And if you look at the last decade of the VIX, that is where we have found bottoms. So in his opinion, we're still coming down off this COVID spike, and there is still downside to go. Not necessarily, it doesn't have to be in the short term, but resorting to the mean has a ways to go. And I look back at 2008 and saw that in 2008, it took 2 years for us to get down to this 15, 16 level from that spike. So really could be long drawn out consolidation if we're looking at that way. Gold. So gold had a nice bounce off of defending support, but we are still rejecting from resistance. So all I care about in the short term are those two levels to mark that range, 1850, although the bigger picture level is 1848, so I would go down $2, 1848 and 1891. And you can see we rejected from 1884. So staying in this tightening range, and if we pull up the 12-hour time frame at this point, it's a good old equilibrium. Low, high of the bounce, higher low, potentially a lower high as we trade sideways. Silver is doing the same thing, struggling just under 24.50 resistance. If we drop back down, it'll be a 12-hour lower high being set, and we'll continue to trade sideways within that tightening range. The miners tried to get their bounce going. Is this our daily lower high already being set? Too soon to say because we're still in an hourly uptrend. So something to be watching for tomorrow, of course, depending what the metals are doing. But if we were to bounce, I'd be watching for an hourly lower high compared to 38.08. And then if we drop down and break the low of today from there, we would confirm the hourly downtrend and confirm the daily lower high has been set. But as of right now, watching for an hourly high or low with this pullback. And let's see how gold relates to that in the short term. Gold's trying to set an hourly high or low as well. Oil, confirming the bearish reversal candle from yesterday. The 4-hour uptrend remained intact when we last looked. Weak little bounce, lower high and lower low. And if you look at the S&P 500 futures chart, it's the same thing on the 4-hour chart last night into today. So we confirmed a 4-hour downtrend, which means zoom out, daily consolidation is underway, and we're now looking for a daily high or low compared to 37.06. So plenty of space for the bulls to maintain the daily uptrend at this point, and we were certainly extended in the short term with that move to start this week. Natural gas, is this our daily lower high being set? Looks like it. Are we still in a 4-hour uptrend? You could say it was lost. It was a 4-hour bull flag attempt that rejected and then lost support. And if this is our lower high, we will then have to come down and hold 265 to try and form a daily higher low compared to that previous low that we just set. If we hold that level, this looks like a weekly bull flag. Very healthy consolidation and very brief. If we lose that level, we confirm a daily downtrend, and the odds of that being a weekly bull flag will decrease a good bit, and we'll look to the weekly 12-period EMA. So again, we can just make these simple if-then statements. If natural gas is holding 2656, then the weekly chart is in a bull flag setup. If this support level breaks, then we are likely not in a weekly bull flag. So that's where we stand in the short term. We're watching for XLF's daily high or low. We're watching to see if the QQQ bears get follow through to set that daily lower high. Watching those sectors go fairly inverse to each other, but they were both red today. So always watching that shifting relationship. Today I was trading NIO like a madman. Just a monster of a move. Look at this monthly chart for NIO, electric vehicle hype. And you've heard me say in these videos, any chart that has a monthly move of multiple hundreds of percent, and in this instance, 1,000+%, you know to be cautious because we don't go up forever. We will hit a top and we will pull back significantly. This is just a mini Tesla in the making as far as the price action. Tesla did the exact same thing, and when we topped out, the pullback was very notable, 35%. So when NIO hits its temporary top, we will pull back over 20%. I am very confident of that. But trying to time that top is definitely the tricky part. And it's something I'm watching for on a daily basis where I'm trading it in both directions. Today I probably had over 50 orders. Let's just pull up my orders real quick. No, I'm not going to be able to. It's on my other monitor. I'm not going to be able to bring it over. I had at least 50 NIO orders just scalping both directions. The big money maker for me today, and it ended up being a 3.5 day maker, so a solid win, but it was watching this 2-minute uptrend, knowing that the bulls had complete control off of this 2-minute uptrend. I played off of this support multiple times, bullish, and then I was just waiting for this short, and I nailed this break right here and got some real nice follow through. And that was the best trade of the, it wasn't 50 individual trades, it was 50 plus orders, and I would, scale into and then scale out to. So one full trade would be maybe 4 different orders filling. So I probably had a dozen to 15 individual trades and 15-minute equilibrium to end the day. And you better believe I'm watching again tomorrow for both directions, but having a little bit of a bearish lean. As we head into earnings, I'm going to anticipate some profit taking, but I love the volatility in both directions, and it's reminding me why Tesla is my biggest gainer on the year. Trading it in both directions, just give me that volatility, and you give me a 10% range on the day, I can scalp 1 or 2% very easily within that range on a daily basis. The wider the range, the easier it is to get my little piece of the pie. If I'm trading a name and the daily range is 1 to 2%, I'm not going to get my 1 to 2% unless I nail the tops and the bottoms, which I'm not going to do. So the wider the range, the bigger the pie for me to take my little piece. That's that. Hope you had a good day. Today's do good things. Today I was going around. It was raining real hard last night, and I spent my morning walking sweetie pants and saving worms from puddles. That was my morning task while the market was getting ready to open. And I'd say a solid 5 worms were moved to dry land, and hopefully they're wriggling around another couple of days at least. That's that. Have a good day.